think the message is that the market is communicating that the narrative has broadly shifted still towards a soft landing scenario, not that hard landing scenario that earlier in August that we were anticipating. And of course, we have the big Jackson Hole meeting at the rest of this week. And we think that a much more dovish version of the communication from the July FOMC, from Fed Chair Powell, in light of the soft CPI reports, in light of the weak job growth numbers, as well as the further increase in the unemployment rate, will really reinforce that narrative to reinforce that the 25 basis points cut is likely to come next month. Now, the question is, do they defer it to 50 or 25? And that's a question I think that will likely be reinforced with the August unemployment report that we get.
Yeah, and one of the popular plays has been gold. We saw a little bit of retreat from all-time highs just a couple of days ago. Do you have a price in mind? Does gold keep marching higher as we count down to the actual cut and perhaps more later this year?
Absolutely. I mean, I think at the beginning of the year, we were very bullish. In fact, it's our most bullish commodity for 2024. And I think that's broadly on a trifecta of Fed cuts. You've got very strong central bank demand, particularly from emerging markets like China as well as in India. And of course, given the geopolitical risks that we have mired across the world, it is seen as the first resort when you look at the geopolitical play. So we've got gold ending the year at 2,750. We're way above the street. And in fact, we've got it breaching the 3,000 mark by the summer of next year. Primarily, as these Fed cuts start coming through, central bank demand from emerging markets are likely to continue. And the geopolitics, we think that, of course, that will likely play out further as we look into 2020.